we now have news that big banks are starting to look at Bitcoin-backed debt.
Also, what a disaster that's going to be.
Hold on a second.
Worse than
El Salvador went ahead and said that they're going to issue this Bitcoin-backed bond. I saw your tweet where you said it was worse than the subprime debacle. Why do you think it's worse than subprime?
You're talking about Bitcoin as collateral for a loan. And the problem with subprime mortgages was that the real estate that was collateralizing it could lose value.
Okay.
Right. And so when the lender, if the borrower defaults and the lender looks to the collateral, this house, and now they go to sell it, well, the price could be down.
So you're saying, just so people at home can pay attention here. So let's say a house is, we use these numbers, $100,000. And in order to buy the home, I put down no money or 5%. I put down $5,000 and I borrowed $95,000 to buy the home.
Right.
Based on the fact that the home is worth $100,000. And historically, the idea is that that house, if it's worth $100,000 today, 20 years from now will be worth more than $100,000. The problem is,
or if 2 years or 3 years from now, because you might default right away. You might lose your job, right after you buy the house.
So the idea is, if though the house actually isn't worth $100,000 because the market had gotten too hot and people had gotten loose with their lending requirements, now all of a sudden I actually lend you not the $100,000 value of the house. You're going to buy the house for $200,000. You still put down $5,000. I lend you $195,000, and you default. When I go to liquidate the house, I can't sell it for $200,000. I have to sell it for $100,000 of what the actual value is. I'm underwater on the loan because I wasn't able to do it.
Well, yeah, I mean, now you're talking about a big decline, a 50% decline in real estate, which
I'm just using an extreme example.
But right, that's rare, right? The problem with Bitcoin is a big drop, let's say a 20, 30% drop, isn't rare. It happens all the time.
Hold on, because this is really important. I actually think I'm going to get you to understand why Bitcoin-backed loans are very unique to the point where you may go and participate. Ready? In a house situation, if I gave you that $195,000 loan and the house declined, whether it's 5% or 50%, in order to liquidate it, I have to sell a house. And if the market is declining, it is very, very hard because it accelerates like it did in the housing crisis. Everyone was dumping houses because there was so much inventory in the market. There weren't enough buyers. People were in dire financial situation. And so it got worse and worse and worse, faster and faster. Tons of large lenders got in a lot of trouble very quickly. We got the global financial crisis. With Bitcoin loans, one of the things that is very unique about them is if you said to me, hey, I have $200,000 worth of Bitcoin, you can only borrow on these platforms up to, let's say, $150,000 against your $200,000 worth of Bitcoin. So it's an over-collateralized loan. Now, the value or the advantage that Bitcoin has compared to your house is when the house price starts to fall, there's no mark to market, so it's hard to tell, but you can feel it in the market, or you can see comps and stuff like that. But you have to sell the whole house to recoup your cost. With Bitcoin, it's a highly divisible asset. It can be denominated up to 100 million Satoshis, and there's a liquid market. So what these lenders will do is they'll say, give me your $200,000 of Bitcoin. I'll give you a $150,000 loan. You go do whatever you want with $150,000 loan. I'm going to take your $200,000 of Bitcoin. If the price starts to fall, I give you a margin call. I say, hey, you're now at 70% margin. You have to cure the margin call. If you don't cure,
yeah, I understand how it works.
Hold on a second. I can sell a piece of the Bitcoin into the market. So I don't have to sell all 200,000. I can sell $1,000 at a time if I want it. And I can make sure that I will never lose money on the loan because I can always liquidate the over-collateralized piece that I have to prevent any sort of default.
Let me stop you. So first of all, yes, loaning against Bitcoin is more similar to loaning against stocks than loaning against real estate. Mortgage, because mortgage loans, yes, real estate, it's not all identical. And yes, if you have to foreclose, there's a whole process. And then you got to put the house on the market and, it could take a while to sell it. But of course, too, when somebody takes out a mortgage, they don't mark the house to market every day. You can't get a margin call. As long as you pay your mortgage, you don't lose your house. But if you leverage your stock portfolio, they mark the stocks to market every day. And if the stocks fall by a certain amount, you have a margin call. You can't meet it. They start selling your stock. They don't sell all of it. They sell what's required, right? The same with Bitcoin. The reason I think loaning against Bitcoin is inherently riskier than loaning against stocks. And let's say you're loaning against non-dividend paying stocks, so the owner is not getting any income, is that I think Bitcoin is more volatile.
Correct.
than stocks, so more likely. Now, obviously, any individual stock, look at DocuSign today, down 33% overnight. So if you were on margin for that one stock, but I think brokerage firms, when you margin one individual stock, that sometimes they up the margin requirements. They're worried that they could have a big move. But I think Bitcoin is more prone to a big move.
Okay.
But also, here's what you forget. Let's assume that there is a 30-40% drop in Bitcoin.
Let's say 50%, which happened last March.
All right.
I have an example. I don't want to say the company, but I know a business that had billions of dollars of Bitcoin-backed loans out on March 12th or March 18th, whenever it was, and Bitcoin fell 50% in one day. They had zero loss of capital.
Yeah, I mean, they're very fortunate at that time. But I would imagine that, let's say Bitcoin were to drop 50% in an environment where a lot of people had Bitcoin loans. And I think a lot of people who have been hodling Bitcoin are probably taking advantage of these loans because A, they don't want to sell their Bitcoin and pay tax. They don't live in Puerto Rico, so they don't want to sell their Bitcoin and generate taxes. They also don't want to get off the gravy train. They think it's going to the moon. They don't want to miss out on all the appreciation, but they want to get out of their parents' basements. They want their own place. They want to buy a car.
There's also opportunity cost of there's not many other places to go in assets, right? You can't go back to dollars because that's obviously being depreciated. Gold is down.
But my point,
6%.
But here's just my point. My point is that a lot of these people are borrowing against their Bitcoin and they're going out and buying stuff. Right, so they don't necessarily have money to meet a margin call if they get it because they spent it on a car, they spent it on a vacation, they've borrowed against their Bitcoin. So let's say you get a big drop in the price of Bitcoin, 50%, and now the margin calls go out, and the people are like, I don't have any money, I spent it. Okay, well, we got to liquidate your Bitcoin. Well, everybody's getting liquidated at once. And where are all the buyers? All of a sudden, you have this massive liquidation into a weak market. Maybe the exchange is shut down. Maybe it's like, oh, you can't even sell.
But we had this happen. This isn't hypothetical, right? We had this happen in March of last year. What you're saying, it has some.
There may be way more leverage now than there was then.
There's less leverage than there used to be.
And more liquidity.
Yeah, but there was a 50% drawdown, which I think is a fair argument to say, hey, if a bunch of people are doing this and then there's a mass liquidation, right? Obviously, the price falls drastically. My only point is that Bitcoin is the single best collateral for the lender to take for a loan.
Why is that the best collateral?
Because even in your example of stocks, I have to sell the full stock. So if an Apple share
you have to sell a full share. You have to, but
hold on. But
that's still small money.
But you don't have to sell the full share of Bitcoin in order to continue to protect the loan.
Well, nah. I mean, that's ridiculous. So a share of stock might be $10 a share, $50 a share. I mean, when people are borrowing $50,000, $100,000. I mean,
so at $10, how many shares do I have to sell? I have to sell, what is that, 5,000 shares?
But the amount of money,
right
the fact that you can't break a share down into a half a share is ridiculous because that's such a tiny amount of money that it doesn't matter.
Depends on the price of the share.
No, you could sell if I margin 1,000 shares, you could sell 999 of those shares. If you instead of 999 and a half,